Good afternoon, everybody. Welcome to Trading the Close. My name is Gareth, Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we saw a small rally in the stock market today. Certainly not a massive move off of the CPI data. CPI this morning coming in a little bit better than expected, meaning a little bit lower inflation. Now, first things first, people say, well, why aren't we seeing a bigger response? Well, the going prognosis is that essentially the tariffs that have been imposed are not reflected in this number yet. And I think that's why the markets are rallying a little bit of a sigh of relief, but not having a monster snapback like many had hoped. So again, it is an up day on Wall Street, but it is not as big as many had hoped because, again, the tariffs not being reflected fully in this number yet. All right, follow me over to the big board here, and we'll take a look, and we can see that the Dow Jones Industrial Average is actually slightly negative on the day. Now, you might say, well, why is that? It's probably Apple. Apple is going to be a majority of that. We're also seeing names like Walmart, the retailers, continue to suffer. And Walmart has fallen from about $106 down to about $85 now. It is nearing a major gap fill around 84. That might be a possible bounce level for technical traders out there. But again, the Dow under pressure. We'll look at Apple stock in just a little bit, which is breaking the neckline of the bearish head and shoulder patterns today. All right, the NASDAQ today getting a nice bounce here. So again, it's not Apple, but it's other names like NVIDIA up 6% on the day. That's helping. You can see Google over here up 2%, Microsoft green, Broadcom, and there's NVIDIA having a big day. And then right here is Apple down about 2.4%, continuing to show weakness. S&P slightly higher, about 0.5% higher. Oil is trading up. Remember, I've been saying there's likely a bounce on the horizon. We're getting a little bit of that. I have upside kind of penciled into about $70 a barrel. And at that point, it'll get more gray. Does it continue a little for me or not? I'm not sure, but eventually I do think we roll over and break lower. Gold today continuing to be up, but again, we have not retested that 29.55 level. That's going to be the key level on gold. And Bitcoin, again, about as unchanged as possible today, just down $6 or $6 here. And again, still hovering around 83,000 on Bitcoin. All right, looking at the daily chart again, here is your daily chart drop off on the S&P 500. Today, again, we are higher on the day, up about 0.57% on the SPY with just about a minute or two remaining in the day. But again, like I said earlier at the start, it's not the robust rally many would have thought, considering the inflation numbers came in slightly weaker. We're going to have to wait till the next month to really see if there's an impact from these tariffs to get that robust rally. And I think there's still a lot of concern. I mean, when Walmart's dropping like it is, Target today, TGT, that's having a big drop today as well. This is all because the consumer is clearly at a point where they are cutting back on spending, and that is the engine of the U.S. economy. All right, now in terms of levels to watch, do we continue lower here or do we get a bounce? I'm still in the camp. We're due for a little bit of a bounce. But again, like I'd explained in the game plan this morning, any sort of bounce, whether it's here, whether it's a little higher, to me at this point, because we've broken the long-term uptrend on the market, this is now a sell the rip market versus buy the dip, right? All in here was always buy the dip, right? And we made a new all-time high here, pulled back, buy the dip, new high, buy the dip, high, right? So you have these trend lines that kind of kept the trend of the market going higher. Well, that has now been broken, right? Very clearly right here, that has been broken. So again, you just have to understand as a technician or an investor that things are now in a process of changing with the investing world. And that is now, again, a market that will have great bounces. In fact, I closed out 2 trades today in smart money stocks for about 15% gains that we held for 2 days. But again, I'm taking those profits, banking them, and then we're moving on to new opportunities. All right, let's just quickly go over the S&P chart on a bigger time frame here, folks. I want to bring up this chart here. And what I want to do with you guys is look at where we could be headed to the downside. So, to do this, what we're going to do is we know that we've had the uptrend, right? So this is the uptrend that broke, essentially, right? We had the S&P break to the downside. But the question is, well, where could we be headed before we find major support? Like, where is this downtrend going? And to do that, what you do very simply is you take your previous major pivots, right? So we take the COVID low and we connect it through the bear market low of 2022. And if we drag that out out, we notice right here that it goes right through this low in November of 2023 as well. And so this trend line now becomes the next major target. And when I say major, I mean like where you could expect a prolonged bounce or grind higher. I'm not going to say the low of any sort of pullback because I don't know that, but that would be a key level to watch. And then look at what happens. If we take the high of the bull market and we drag a horizontal line across, what do we notice? We notice that the two lines intersect, and what we know is that if price were to fall into that level, the two kind of X marks the spot, the bounce would be tremendous, or at least we should assume it would be a very solid probability of a big bounce there. And again, just to zoom out, you can see again, COVID low through all of these lows here, that high, the bull market high, and where it happens, it intersects right in that vicinity. All right. Tesla today, good bounce on Tesla here, guys. And again, this is one that we are long in smart money stocks. We are in the money pretty nicely, about $20 at this point. I still think it's got more upside, but I did pound the table on this with you guys saying we're due for a bounce off of major technical support, and that has been a good mover. Now, take a look at this. This is a very interesting chart, and let me go to the big board to go over this one here. But essentially what we're seeing here is that you have the head and shoulders pattern, right? We know this is a bearish technical pattern, shoulder, head, and shoulder, okay? Now, we've broken the neckline, and that's the trigger for the pattern, right? So you can have a head and shoulder pattern, but if it never breaks the neckline, there's no real teeth to it, essentially. This one broke the neckline right here, okay? It traded down, and then look at today. It trades right back to the neckline, but notice how the neckline now is utilizing, or essentially is creating resistance on NVIDIA. So again, amazing how former support, right? It was support here, it was support right here, and it caused these bounces here and here, but once it breaks, that becomes resistance. Always remember that, folks. Support or resistance, when you're above it, it's support. Once it breaks, it becomes resistance underneath. And again, just a great little lesson there for traders and investors looking to improve their technical analysis. Okay, a couple other charts to go over. Apple today, speaking of head and shoulders, guys, this has now confirmed a breakdown of the head and shoulders. It has closed below. It hasn't confirmed, in all fairness. It has not confirmed, but let's watch and see. Apple has really been on a collapse course here, but this is a big deal to me because, again, this shows vulnerability for basically one of the better performing mega cap names here, which has really just been going sideways for the last 6 months to 8 months. But compare that to names like NVIDIA that have really taken a dump out, and this one's held up better. But either way, it has now closed below the neckline of the head and shoulders, and that makes it very vulnerable for continued downside. One of the stocks I am keeping a very close eye on for a major long opportunity is JP Morgan Chase. There is a gap fill just a little bit lower at around 121 to 122, and this area right here, the stock has been in free fall from the highs, the all-time highs of around 280, now down to 227 or so. If we dip tomorrow into this zone becomes a big buyable level, and I would expect a technical bounce on the charts. Bitcoin today, like I said earlier, almost no movement, stuck between resistance and support. Nothing new to report on that. Gold did have a nice little update today, but still has not taken out 29.55, and again is still sandwiched between this wedge pattern here, winding the spring tighter and tighter for either a breakout or a breakdown. And silver today actually did push above a key level. It's an unconfirmed breakout, but you might, if you can get some continued momentum tomorrow, we should start making our way towards $34.80 to $35. Then we have oil, which continues to get a good bounce here. And again, I still think there's a little bit more upside to at least $70 a barrel. Then we'll have to see again, does price continue to bounce or does it start to roll over? And then lastly, natural gas, folks. This has been an awesome dropper here off of a topping tail. Again, remember the topping tail, folks. When that occurs, that is a big bearish signal. It tells you institutional money is unloading into it. And again, that's what creates the topping tail, is all the big sellers dumping into retail, closes at the bottom, and look at the fall that continues. It is coming, though, into support around 405 on nat gas. That'll be its first big test of support. All right. So listen, there's lots going on here today. Again, a small update on the markets. Nothing to really really to write home about otherwise, aside from stemming the bleeding in the markets. Tomorrow, we're going to watch to see what economic data hits. What is the market's reaction? Again, with a very small bounce, does the buyers, will there be enough buyers to keep this market afloat and get it a bounce? Or do we see it roll over with more tariff worries and economic policy worries as well? So I will be here tomorrow at 9 a.m. for the game plan. As always, folks, I appreciate you guys supporting us here at Verified Investing, taking essentially data and analysis of charts and using that to make decisions versus what everyone else does out there, which is using emotion, right? If you follow the charts, they literally give you probabilities, and probabilities, if we follow the high probable trades, we can win more than we can lose, and that's the essence of this game. All right, you go have a great rest of your day, folks. Thanks for tuning in. I'll see you tomorrow. Take care.
Hey guys, Lawton with Verified Investing here. We're back with another video. Last video, I told you I was going to show you how to trade, so let's get right into it. Let's say you want to trade Pepe USDT, right? So in this case, let's say I'm looking at the chart action, and I think that this sideways consolidation means Pepe should go up. Well, I can put amount of Pepe I want, or the amount of US dollars I'd like to put into this. In this case, let's say I'm going to put $150. But since I'm can use 10 times leverage, it's going to cost me, you see here, only $15. So let's buy it by market price, and it looks like I'm in. Another thing I could do is drag this and put in a stop loss. I can also add a take profit up here. So now my levels are in. I have a stop loss, a take profit, and my order's been filled. So it's just that easy to trade with Bluefin. All right, tune in next time where I show you about copy trading and some of the other cool things that Bluefin has to offer.